Thank you, Dirk. I guess there won't be any questions left on German fiber now, which is sad. You know, I just got the hang of it. But we have about 20 minutes for questions now. Maybe start with Fred over here.
Hi, thanks. It's Fred Boulon from Bank of America. Firstly, just trying to understand a little bit your strategy on 5G and the wireless broadband. So what do you mean by this synergetic rollout with fiber to the home? So do you think it's a technology that could replace fiber rollout in the large scale in rural areas? And then secondly, to rebound a little bit on Tim's comments around retail versus wholesale. So you have 40% share in broadband. Obviously, your wholesale share is much bigger. So when you look at your long-term, where you want to be on the 10-year view, is a philosophy to deploy as per your retail share, or you want to retain the very large share you have in wholesale, which basically means rolling out much more than your retail share in terms of high-speed broadband? Thank you.
Okay, let me ask those two questions. So 5G, and again, Claudia will go later into 5G. For wireless to the home, you will need a fiber fairly close to the home. So it is not a technology that will allow you to cover hundreds of meters of area where you don't have fiber. So we believe it complements a fiber rollout. But for example, it might be an easier way to cover certain areas where you don't have direct fiber to the home, but you can go closer to the home and then do the last mile or the last meters on a wireless technology. It might be actually that we are planning to roll out fiber in an area, we have fiber already there, but the last meters or the next wave of the rollout will be out for another 6 or 9 months, and if customers are there and want that technology, it might be worthwhile for us. It might be in some areas, we're not sure of what the demand is. We'll start with wireless to the home, and then we'll see. And again, it also depends on getting some experience on what does it actually work? It will need line of sight. Where do we really have line of sight? How does that work? There will be some questions there. Hence, to your question, is it going to be a solution in rural areas? We believe it's not necessarily a standalone solution for rural areas because you will have fiber closer, but it will be a great complement to a fiber rollout that you're doing now. That's for the first question. Second question, retail versus wholesale. Again, I look at this as network utilization. That's the most important part for me. If I built a network or I have a network with a lot of fixed costs, I want to make sure that it's being utilized. A lot of the fiber rollout is very difficult to do just on your own, just with a retail brand. So that's from my overall perspective, so I prefer a highly utilized network. Secondly, obviously, I want to make sure that I get a fair return on what I'm having, i.e. wholesale pricing needs to be okay. And then on the third one, I probably prefer retail over wholesale if I have to, but that then is probably a tertiary degree of what we have. So we still expect that wholesale will be there and to get the network utilization, but again, we'll also strive from a retail perspective, obviously, to get a higher market share.
So you'd be comfortable in the long-term view to have a significant base of your retail customers on this whole buy regime where you actually don't own the network, or the core assumption is still that you want to own your network?
Oh, okay, so that's a whole buy question, a follow-on question on whole buy. Right now, I mean, we're a network company, as Tim said earlier. We feel a lot more comfortable if you own everything. However, we also understand we won't be able to own everything, and there are actually fiber networks today existing and rolled out, for example, in the city of Cologne, where we probably don't want to roll out another network. Now, what commercial agreement we have to have if we go for a long-term, partnership with them, we'll have to see. But as we said earlier with EWE TEL, we're very open to long-term partnerships where we might not exclusively own the network.
And also Tim's point with the 40%, Tim, you correct me if I misrepresented, but it's a 40% is our retail share, correct? But there are other players out there who have market share, and they don't invest. So it's a point. We're making a point, right? Why look at us? We are doing more than our fair share in the end. We will do a lot more than our fair share. That's the point. Okay, so next I have George.
I was just wondering, the 2 million homes a year that you announced, is it fair to assume that that's on a consolidated basis? So all these co-investment arrangements could end up actually being much more broader rollout over time. And based on that, I just wanted to understand from a regulatory framework, what you're proposing now with EWE, is this preferable to what you are seeing if you go on a rollout standalone? And regarding the last few meters, is it possible to give us an idea how much of the total investment will be those last few meters? Because then obviously the co-investment becomes relevant for those that haven't invested. Thank you.
So that was actually 3 questions, so I'm trying to answer them. The first one was the 2 million homes per year right now assumes our collaboration with EWATEL. It does not assume any others on a larger scale. We assume some whole buy. It does not assume any others on a larger scale that we're having. The second question is the second question was your framework with AWA. We believe for 2 reasons it's important. The one is it's an innovative approach of how to build fiber in a country, in Germany, and we believe we will have to go in these collaboration models. Hence, we're saying this to us is a master case or a sample case of how collaboration could be done. We believe it's actually, the government looks at this very positively because they're basically saying, well, this creates coverage rather than us overbuilding each other, built a larger area together. That's the framework behind it. We have presented this to both the cartel authorities and the regulator. And again, this is in the middle of the process, so I don't want to go on details. But so far, we've received some quite positive remarks in terms of the allowability and the possibility of this deal. Is it preferable to a standalone rollout? Yeah, if I had endless money, it would not be. I don't have endless money. And plus, also don't forget, this EWATEL, to just take that example, is a very strong brand up in northwestern Germany. So if you roll out alone and you have to go against a very strong local brand that has a local network, it's much easier to go together and you can afford the network economics. And I think that's their reasoning as well. I think, and let's also be clear, the model that I've proposed to you here as our wholesale model is also the model that we would be using in that joint venture with AWA. So we are deliberately discussing that with them, and we're saying we believe that should be the market model in Germany. As to your third question, how high is that co-investment to the last mile? It is significant. Now, this is an average of the average of the average, so I'm not going to go into individual numbers. But if you look at those last miles, there are quite high costs on the fiber to the home network. So yes, we will ask people who want to use that network to actually share a significantly larger part of the investment risk than they're doing today.
Okay, so I have Ulrich next. Ulrich Rade there.
Thanks very much. Yeah, Ulrich Rade from Jefferies. I would like to explore this hurdle rate, the 7.5% a bit. Is this calculated as a standalone number, or does it have opportunity costs in there in terms of, losing revenues on copper and gaining them on fiber, or how is this actually calculated? Because it looks like a relatively high number for a fiber to the home project. So I was wondering how that's sort of meant. And related to that, does it actually make sense to set a hurdle rate for FTTH at all? Because ultimately, it's almost a bit of the cost of remaining in business over time, right? So the idea of to set a quite high hurdle rate for the next generation technology that will probably come anyway seems to be a bit artificial. So I was wondering how you rationalize that. Thank you.
Okay. So 2 things. Again, in times of limited opportunity or limited capex that I have available, I need to make sure that I'm investing my capital there where there's the highest opportunity. Setting a high hurdle rate, by the way, with a significant risky investment that we're talking long paybacks here, we believe is actually prudent, and I don't think it's out of proportion if I look at other markets. How do we calculate it? Again, this is a calculation where we obviously take into account the future of our copper network. What would that happen? But it's not a total case based only on retaining the business that we're having. Hence, I believe it makes sense to set a high hurdle rate to prioritize the investment right. Secondly, the wholesale models obviously will have to be based on the rate that you're using to calculate, because in a fair wholesale model that I'm using, I have to share that risk, and that share is expressed in the rate that we're having here. I think those were the 2 questions. Yeah, is a idea of setting high hurdle rate for next generation technology is artificial. We know we have to build fiber over time. The only question is how fast you have to do it. And again, in times of limited investment, I want to make sure I invest it there where there's the best case first.
Okay, I have Akhil next.
Yeah, hi, good afternoon. Two questions, please. Firstly, I just wanted to dig a little bit into your EBITDA guidance that you've provided. I know it's quite rare for companies to give midterm targets, but I guess just trying to understand the operating leverage and cost assumptions, guiding to 1% revenue CAGR over that period. There's cost cutting, there'll churn reduction, which will offer further direct cost reductions. I guess trying to understand why there's not more operating leverage in terms of the EBITDA performance that then translates from that. So, what are the other assumptions? What's really within that we should understand? And I guess specifically, there's a lot of excitement around digitalization in the sector. So I guess keen to understand why that doesn't drive greater EBITDA growth performance.
So again, I think this is, we've talked about indirect cost savings, we've talked about revenue growth, we haven't talked a lot about direct cost. We don't believe that direct costs will necessarily go down that much, so we're taking some prudence on the direct cost line first. Secondly, also, we talked about, for example, our business area, that we're moving from classical telco revenue into IT revenue. Now the gross margins on those revenues are significantly different. So there is going to be a margin dilution, if you want, just from the change in the nature of the business that we're doing that we've built in.
Yeah, I mean, basically it's about keeping some flexibility in the marketplace, right? So that is a good thing to have. Okay, Emmett.
Yes, thank you. Just one question, please. Just sticking on the cost theme, can you talk a little bit about labour costs in Germany? How much of your revenues are consumed by labour costs, and what the outlook is for this line in terms of employee numbers, cost per employee? Just some big picture thoughts, please.
How much of our revenue is in labour cost?
How much of our costs are labour cost? I think it's about half of our indirect costs. Thomas will talk more about it tomorrow, so if you find it in his presentation then. I mean, the drivers are the decline, but against that is the inflation in wage costs. We've just had a new 2-year wage agreement. The average rate is in line with historical wage agreements, about 2% plus. So to the extent that we will reduce headcount more than the 2%, the total labor cost will come down. So it will come down.
Yes. We don't disclose right now the breakdown. I think Thomas will do part of that tomorrow for the group. Obviously, there's a significant amount of the savings related to labor cost. And again, these are net savings. As Hannes said again, there's a labor cost inflation against that. So there's a significant reduction in headcount or in cost in that plan as well. Again, we've done things like that in the past. And again, Thomas will talk about this a little bit more tomorrow.
But the plan is basically backed up and comprehensive. So the cash flow guidance, for instance, encompasses all the special factors that pertain to it. Okay, so we have, well, we actually had a bunch of those guys. So we have Sam for now.
Yeah, thanks for the question. I guess we just heard that CapEx in Germany, kind of your 2014 expectations ended up missing where you thought you'd be. What gives you a bit more confidence that this 3 years ahead, CapEx won't be higher again? Perhaps that's more of a question for you, Hannes, actually. And then just secondly, what does the 4.2 billion assume in terms of co-investment? You mentioned already one of the plans, but are you assuming a bit of flexibility around other stuff?
So on the second part of the question, the EWE capex is, and I think that we've discussed that previously, is not part of the 4.2. However, we don't assume any other collaborations or large co-investment schemes, as we said that today. What does it make that we missed the target? I think it's about being disciplined. Again, we are, in my belief, in a much better network position now than we were in 2015. Our networks are competitive for the foreseeable future. Again, if you go 250 megabits per second and you go against a cable network, we tend to miss the fact that the cable network is a shared network. If you look at the size of the cable segmentation here in Germany, we actually believe that there will need to be significant investment on side of the cable companies into segmentation efforts to actually come close to a stable performance on that, and hence we believe that we are on the midterm very competitive with the network they have, and the fiber investment, as you know, is a much longer term investment. However, it takes a long time, so you have to start early.
Okay, so I have a question. Ottavio.
A couple of questions on my side. Ottavio Dorisio from Societe Generale. The first one is on your last mile, last yard investments. You highlight plan that makes a lot of sense. If somebody wants to use your network, should co-invest with you.
Yes.
But the problem is that, of course, this is a very tricky segment of the network because they're highly regulated. So if nobody invests with you and you got the 2 million FTTH each single years, after 5-6 years you got 10 million. How are the regulators going to look at that one? It means that nobody will come in and can access these households. So would you like just to get a bit of an idea about your talks to the regulator? You will be left off the hook about this 8-10 million over 5 years of FTTH, even if no competitor will co-invest with you at the start.
Okay.
The first. The second is on 5G and mobile.
Can I ask that one first? Answer
go
that
ahead,
one
please.
first? Okay. So I think it's everybody here talks about being willing to invest into the market. Even United Internet's out there and we're willing to invest. Now you're saying, well, let's share a part of that network investment for a customer that you want to connect. Co-invest with us. And then they're saying, we're not doing it, but we still want you to invest that share, and then we want to piggyback on your investment. I think that's a very difficult argument to make, number one. Number two, by current regulation, we cannot be forced to invest for somebody else. Yep. So we have to share, if we want to, we have to share an existing network, yes, under current regulation. To then force us to build somebody for something else, I think is even constitutionally quite difficult. And then think of the dynamics that would make, and I think our reaction would be, well, if that is the network, there wouldn't be, or if that is the regime, there wouldn't be a fair sharing of the burden. Then you could talk about maybe higher bitstream prices, et cetera, but I don't think that's the right way going forward, because you have to have an investment-friendly regime in Germany if you ever want to cover this country with fiber to the home without spending billions of public money.
Yeah, even if nobody's forcing, this 2 million is already in the plan, so you're going ahead anyway. So all this 2 million are conditioned on the fact that you want the regulator to tell you that.
So let's be, and Tim said that earlier, we're not going to build 2 million independently of whatever regulatory regime.
So that's back to
that is not going to happen. We are confident by what we're hearing from coalition contract, from what we're hearing out of it, that the government has understood, A, the regulatory regime for fiber, or the regime for fiber, has to be fundamentally different from the one we use in copper. Copper infrastructure built 100 years ago versus something you built today has to have a different regime. We've had that. There's many public statements on this from government officials and even from BNetzA. So we believe, yes, there's going to be more investment-friendly regime. Secondly, we're saying we're willing to buy fiber networks at that price. We're willing to pay other people exactly the same amount. And that amount is cost-based. So we're not saying, the issue you have is more like the average of the averages, so it doesn't become too complicated. But the issue of the last mile is cost-based. So we're saying, hey, you share that part of it. I think it's extremely fair in the approach. It's going to be very difficult to argue against that. Again, you never know, but let's be very clear that we believe our commitment to that rollout is based on a fair regulatory regime which protects investment. It doesn't necessarily have to be the one that we're proposing, it's our proposal, but it has to be fair and encourage investment.
Pastor on this and the second. I will already take all of your time.
Okay.
So, Robert.
Robert from Deutsche Bank. On your guidance, have you baked in loss of wholesale revenues from Vodafone? That would be pretty high margin stuff. Perhaps that's related to a previous question. As the CapEx shifts next year from FTTC to FTTH, does that have any impact on your engineers? Do you have to rehire or anything like that? Or can you just redirect those engineers? And then the last one is related again to a previous question. The special factors being flat, is that effectively business as usual within special factors, or are there some special factors going up and some going down?
So let me come to the three. The guidance, you've seen our guidance on the wholesale numbers. They were part of my presentation, so we're not anticipating significant loss of the revenues to fiber. Again, when Vodafone bought Kabel Deutschland, one of the big cases is we're going to migrate all the wholesale customers that we have back onto the cable platform. Now, you've seen the performance of our wholesale business over the last 3 years, so nothing has happened. We're not saying nothing's going to happen, but we believe that our platform is attractive enough and sticky enough so that we'll continue to grow our wholesale revenue. That's number one. CapEx shift from FTTC to FTTH. Now, this doesn't happen overnight, right? So we stop today and then roll out tomorrow. That's also the reason why, if you want to get to 2 million households in 2021, you have to start practicing and getting your organization ready. That's why we talk about a ramp up. And hence, we will gradually shift our engineers. Again, a lot of the work that's being done, specifically in FTTH, is digging, civil work. So we don't dig. We have hired companies to do that. We have to do some changes in planning resources and those kind of things. We have to do specifically skill sets also, I think, more on the IT space, but that is baked into our plan. And as to special factors, I would refer to Thomas for more details, but in the German plan, there's no other things than what we just said.
In fact, we have those machines out there, but we also are doing fiber right now, and we also have a demo later today that Claudia will talk about, and then Walter will demonstrate, our German CTO, where we show how the fiber factory is innovating and how we want to do it. So it's a big part of doing it efficiently. So can I have your question? Sorry.
Yeah, hi, it's Steve from Arite. Can I just come back to Robert's question and just ask whether in your forecast you've baked in the Vodafone Unity deal completing? And if you have baked it in and it hasn't made any change, why are you so opposed to it, first? Secondly, on your B2B revenues, I think you're assuming 500 million euros in new revenue, which is about 3% growth over the period, which is in fairly stark contrast to most other B2B markets we see. We've got cable trying to take share, Vodafone building 2,000 business parks. What gives you such confidence that you can generate that sort of growth out of your B2B division? Thanks.
So, as to the question again, look at the time it will take, and we're looking at horizons regarding your Vodafone question. We're looking at time horizons it will take to complete a transaction, and once you've completed a transaction, to really then have a significant effect on, for example, our wholesale business. We don't expect that in foreseeable areas within the next 2 years. I think that's the one. The second thing, to your second question, why are we so opposed to it? Again, this has to do with market dominance in the TV sector and with blocking access to building associations using that market dominance in the TV sector. And as you know, that the access to in-house cabling and in-house networks will be a factor in the speed of the FTTH rollout. And hence, we believe it's unfair. We believe it should not be allowed from a German perspective. And so we're coming from the broadband market, and we believe we have great opportunities in that area. We want to be sure that there's fair competition. To your second question, what gives me the confidence that we can grow in B2B? Well, we've grown in B2B. Again, our market share in B2B, if you look at the telco business, is way north of 50%. And it has been way north of 50% for the last years I can remember. And we're still growing. So what's happening in B2B right now, and everybody says we're going to go in SMB business. Well, going into SMB business, if you don't have stores and if you don't have a sales force out there and saying, I'm going to go an online approach into B2B only, does not work. So we have been very successful in leveraging our distribution footprint, in leveraging our network performance and network superiority in really getting ingrained into the business. Secondly, if you look at areas, and people don't appreciate that, on our B2B business, we're saying, Dirk, IP migration is going to come, all your PBX business is going away. Our market share in the PBX business historically was 20%. We have a network PBX now, in our network, we have PBX now. I can take all the other 80% market share that I have there with the solution I have in that market. So we believe there's significant growth opportunities in the classical business. And then secondly, we're entering into the IT business where we complement a lot of the solutions, specifically in small business space, and we bring them to those customers. And that gives us the confidence why we believe we can grow.
Okay. I have a question from Jacques. Are you still? It was answered? Okay. Sorry.
It was partially answered. It was also the question about the wholesale business and if you expect your outlook to be affected if the deal goes through and if Bitstream has to be offered by Vodafone Unity.
I think I just answered that.
Yeah, okay. So I over here, next over.
Yeah, it's Christian from HSBC. I have two questions, actually. The first one on your savings, the 750 million. What are the costs to achieve those? I mean, is that a net or a gross number? I mean, you're investing in IT platforms and all that, so that takes time and probably some money. And then secondly, on the whole buy, the 15%, if you do the math, that equals around 6 million homes. So I wonder, next to, let's say, Net Cologne and a few others, where are these coming from? So that seems to be a very high number to me.
To your first question, this is a net number, important. So this is part of our regular, so the investments needed to make, for example, in the IT side, are part of the IT guidance that we've given. I've mentioned about special factors, that were stable on special factors as well, so that number is a net number. Secondly, on wholesale, where is that? Now, if you look at the big wholesale players in Germany, there's two things happening. There's a couple of players out there. By the way, they're not the Vodafones and the Unity Medias and those guys. They're usually local players like Net Cologne and Cologne, Mnet, which is a Munich-based fiber company. There's EWA-Tel, which is the largest one in Germany, and there's multiple smaller local network companies. Many of them public-private partnerships, just pseudo-public entities that are building fiber to the home. And hence, we're seeing fiber to the home and fiber to the curb. And this has happened over the past. There was part of the vectoring decision, as you might know. We had to give up some areas because the vectoring was won by somebody else, and those areas we're losing, or we have been or are losing our vectoring footprint. There we will go on wholesale as well.
Great, thank you, Dirk. So we did get through quite a bunch of questions. Sure, there will be many more, but Dirk will be around, and also this evening and in the future. So thank you very much. In future investor events, of course. We're not going to hide him. Okay, so good. We now have time for a coffee break. I think realistically we can't use that to make up time, so it's 15 minutes. Also for those on the web, we'll be back in 15 minutes from now. But I would really urge you to stick to those 15 minutes, because although we take a lot of your time, we also have a lot of stuff. So please be back. Okay, so enjoy your break. Thank you.